Hello and welcome to BQ Prime. A very good evening to all the viewers. I'm Hiral Dadia. And one stock that has been one of the top performers in today's session is Bajaj Auto. Clearly, not only the earnings, but the new dividend policy has actually enthused investors as well. And the stock ended with gains of 6.5% coming in there. Joining us on the show today is Rakesh Sharma to discuss more in terms of what would this dividend policy mean? Why is this actually come up now? And secondly, in terms of what's in store from here on. Rakesh, good evening and welcome to the show.
Good evening, Hiral. Thank you for having me over.
Rakesh, always a pleasure to speak to you. Firstly, this is the third time, if I'm not mistaken, we are seeing that this is a best ever quarter in a succession. So congratulations for that. But the clear outliner over here is that the new dividend policy which has been announced, and that's what I think is, really keeping investors at bay as well. If you could help us understand, firstly, why the shift in terms of the policy and what do we plan to do going ahead?
Well, Hiral, we had a very good experience with the buyback which we had done last year, and there was a lot of goodwill around that. And given the strength of our disposable surplus, we were looking at ways of improving the overall return to the shareholders, not just in terms of the quantity, but also the quality, in the sense that the board wanted to have more flexibility of different options. So by this modification of the dividend policy, which just means that we are adding the buyback as a means, as an option to further enhance the overall return to the shareholder. So now the board will have two options. One is, of course, the dividend, and the second is buyback, which in combination should meet the a spectrum of shareholder expectations. There are different kinds of shareholders, and they have different kinds of expectations. Some are very driven by retail, and some are driven by capital gains, etc. And we hope to be able to rewarding our shareholders and improving the returns by a good combination of both these options.
Right. In fact, I was just, we've done a spectacular analysis with the team where in the last 3 years, we've seen a dividend payout of around 140 rupees per share, which has worked out to be in that range of 21 to 26%. And if we have to analyze this with regards to FY24, if we were looking at the new policy in FY24 itself, the dividend per share could be more than 575. That's almost 4 times the dividend that an investor has got in terms of FY23. Does this calculation actually work according to this? Because if we see the values as per the FY23 report, surplus funds almost accounts to around 18,800 odd crores. Taking that number into consideration and the policy of 70%, most minimalistic number, that's the number. So do you think that is a possibility, Rakesh?
It would be wrong for me to give any comment on that, because this is really a board matter, and closer to the time, we will be presented with these options by the team, and a decision will be taken. But all we wanted to say in a limited way was that the board will now look at the overall return by mixing both the dividend and the buyback options. But exact quantum, as you can very well understand, that has to be discussed and approved by the board before we can sort of start talking about it.
Absolutely. Moving from the dividend part of it in terms of numbers as well, as we started off, again, one of the best quarters on a third consecutive basis. And this is in spite the kind of headwinds that the company and the industry has seen, especially in the international markets, right? again, the margins over there have been under pressure. How have you managed to really get to this?
Well, I would say, Hiral, that of course, first of all, it gives us immense satisfaction that despite the difficult trading conditions overseas, which forms almost 50% of our business in usual times, which has now dropped to 35%, we've been able to post a hat trick of landmark quarters. Uh, I would say that primarily there are three or four drivers for the performance. The first one is a relentless focus for now a couple of years actually on the premium end of on the top half of the motorcycle industry through product innovation, and that has sort of shifted the needle quite a bit in terms of a richer mix because now 65%, two-thirds of our business comes from the top half of the industry. Whereas the industry itself is almost only 50-50% divided. Like the industry has 50% on the top half, but we get 65% from there. So that obviously has had a very good impact on both the top line and the bottom line. The second driver
Right.
is the surge in our three-wheeler business, where the recovery has been very good. And more than the recovery, the market is now quite decisively shifting from CNG, from diesel three-wheelers to CNG three-wheelers. Our shares in diesel segment had been lower, and we had a very commanding presence in the CNG segment, almost of 90%. With the government's relentless drive for expanding the CNG network, a lot of people are converting from diesel to CNG. And that, has really helped us because our overall market share in the three-wheeler business is 80%. There again, our margins and realizations are much superior than the average, and that has really picked up the thing. Then the third thing, of course, is the fact that we've taken price increases at the right time, softer commodities, better exchange rate realizations have also helped. So when you put all this together, you see that that despite the value growth is greater than the volume growth, and the EBITDA growth and the PAT growth is greater than the value growth or revenue growth of the company.
Right. In fact, Rakesh, I see a lot of more confidence that comes in terms of your commentary as well versus the previous quarters, because earlier we did see some bit of skittishness that was coming in terms of where international markets were concerned specifically. As you mentioned about the product mix, the right time to take price hikes, as well as the raw material cost, which is now softening. Would this actually mean that probably we could be now inching towards the right side of the 20% margin mark, number one? And secondly, it's going to be the premium motorcycle segment that is going to be the growth driver.
Yeah, so I would say that the overseas business is bottomed out in quarter four of last year, and thereafter there has been progressive improvement, albeit at a very gradual pace. Each quarter is improving over the previous quarter by 5 to 8%, and we don't expect that kind of thing to change. I don't expect the exports business to shoot up. And we are sort of doing everything to make sure that every quarter is better than the previous quarter. That is our limited objective in balance of the year. And then we will see how the macroeconomic conditions, the geopolitical situation changes, because we don't have any control over these things. Yes, on the other side, driving on the top half of the segment, ensuring that we scale up in Triumph, continuing the big push on three-wheelers, including electric three-wheelers, are certainly things which we will be driving. And I would say that when I put all these together, we can see that there is an array of opportunities unfolding in front of us.
Right. As you mentioned about Triumph as well, how is the alliance evolving, specifically in terms of products, capacity dealership? Because currently, if I'm not mistaken, 5 to 7,000 units are manufactured at companies Chakan 2 plant as well.
Yes, so the product acceptance is extremely good. We have shipped out, we have retailed about 8,000 units of the Triumph Speed 400. We have introduced the Scrambler 400X this month to a very, very good reception. We are in, when we started, we were in 14 cities. Now we are in about 20 odd, and we will try to reach about 100 by April or so. So the network is expanding. The capacity right now, and the exports will commence later this month or early November. And based on that, we will be expanding the capacity progressively from 5 to 7 to 10,000 units by end of this financial year. And then after that, we'll see how much more capacity we should take up. Those calls will be taken in the next 1 or 2 months.
Right. And overall, from an EV roadmap perspective, what's going to be the strategy from here on, especially in the face of the competition that we could start seeing from other players as well? Because currently, Pune, Agra has been the focus where we've seen the expansion. What's the plan from there on?
Well, we are very bullish after we went very slow and steady because we wanted to gather, the customer experience, and if there were any other things which we needed to in terms of product modification. But our pilots have gone off extremely well, and we have captured in the places where we have been there for a quarter almost a 70% market share. Now we have already now gone on from two cities to 10, I think by end of September, and we will be taking this up to 40 in the next 3-4 months. We are focusing on cities where the ICE auto is not permitted, and this will then add absolutely new business to us because it is almost like a new area for us. And given the fact that the margins are almost similar, this would be both in terms of the top line and bottom line new business. So we will be pushing for and expanding the network now that the supply chain is there and there is confirmation of good product acceptance by the customer.
Right. And my last question, Rakesh, coming to you is, if you have to look at the E2W roadmap, with the FAME 2 subsidy actually going, how do you think will the electric scooter ecosystem evolve, and what will be Bajaj's role in it according to you?
So the situation is pretty uncertain because if you see last 3 months, the industry has been at about a 65,000 units per month level. I'm talking about the high-speed industry, which those two-wheelers which get registered. But within that 65,000, the dynamic is that the top 4 or 5 players have garnered about 75% of this 65,000. Earlier, they used to be just about 50%. So the market is consolidating in favor of the top players. But be that as it may, the industry has sort of been steady at about 65,000 after the FAME subsidy was cut. We may see a certain sparkle during the festive, but we really have to look at November and December once the dust settles to see whether substantially the needle is moving or not. Last 3 months it suggests it is not moving, but I see no reason why it should not move. Maybe not at a very fast pace, but it should move. Then the other event, which is discontinuity, which is there on the horizon, is the FAME from April. And yes, reading the signals, it does appear that may get modified, it may get reduced, and then again there will be a certain certain sort of shock to the industry. But that is the nature of the beast, and we feel that EV is here to stay. The growth rates may get tampered, and we've always had a calibrated approach to this market based on how the market is evolving. And we will continue to do it. We know that it's a long-term game. I've been saying that it's a marathon, it's not a sprint. So we will calibrate to the development in the market, because don't forget that, it's not just about us, but it's about the vendors and the dealers who are in our ecosystem, who are also investing in their facilities. And so we have to calibrate their investments as well. Of course, we are into mobility, and not just in India, but in all emerging markets of the world. We would want a podium position as the market matures. So that is our strategic objective. Whether the market is 65,000 or 1,65,000, we will be aiming for leadership positions.
Right. A last quick one. Do you see any pain from here on, which you are really, closely watching out for?
Well, I would say that for us, we would be very closely watching the how things play out in international markets, particularly with the recent geopolitical tensions, and what impact they will have on the financial systems, whether they make people very, very cautious, and what impact it has on the different currencies, and whether that leads to a certain inflation or availability of US dollars for trade. So we will certainly be looking out for that. The commodity side seems to be well in control, and I think the overall sort of behavior of the Indian economy, particularly with the elections approaching, how that sort of plays out. That is always because, our customers, the economics plays because our customers are not very strong financially. And any headwinds in the economy immediately translates into a very cautious behavior. So that is always something which we look out for.
Absolutely. And I think this is the festive time as well. So lots of things to watch out for. I think from a monthly number perspective, third quarter probably will be stronger than the second one if you have to take the events into consideration as well. So that's going to be good news for investors. Thank you, Rakesh, so much for joining us on this. It's always a pleasure to speak to you as well. And thanks for the insights as well. I'm sure the investors are pretty much on a different high altogether with all the new policies that have come in. Thank you. Stay safe and speak to you soon again.
Thank you very much, Hiral, for having me over. Thanks. Bye.